Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, February 27th. And looking at the S&P, we got, expect the expected, a bounce off support and a continuation higher. We're back at these highs that it's been pushing up against for the last week or so. So the question is, really, and I'll bring up the intraday chart, can we touch the top end of the trend line? And I extended it to the right. So let's say it would happen tomorrow. It's around 1385, 1386. That's a pretty decent push to the upside. Another 15, 16 points at minimum, just to even get a look at it. So it's going to be important to see if the market can push up to new highs. And if it does, then every time it continues to do that, I would continue to look to take profits on strength. So what you can see here is a great bounce, basically a little double bottom off last Thursday, and a nice bounce off the trend line and a nice push back up to the highs. But for now, that's all we really have. So I don't think this is. I mean, there were definitely names that performed today. We're going to go over some of them. A lot of them we've actually been talking about. Some I'm bringing back that I've taken profits in, but kept a small position in to stay involved because I think that they're still going to go to higher prices. So overall, the S&P still looks good. Nasdaq, now this is going to have some influence because of Priceline reporting earnings, and there were blowout numbers. But what you can see here on the Nasdaq is we had consolidation for a week or two, and then this morning we bounced off this point of control level for the month of February and have pushed higher. So as long as these lows hold, there's nothing wrong with the Nasdaq, and we should continue to push higher. You can see the uptrend is steep, but at the same time we've had a big long sideways consolidation for a year. So there's no reason why we shouldn't see more upside. Just to look at Priceline after hours to see where it's trading up towards 630, so you can see the point of control for February up at these highs and then just a continuation higher. Now look at how much relative to where it's been back sub 500, pushing above 630 now in 2 months. So here's the beginning of the year down at this 480 level, and now we're at 630. So think of it as a $48 stock going to a 63. That's a pretty nice move. I'm sure there's going to be some profit taking tomorrow, so just something to be aware of, especially if you're long Priceline. I remember saying to get long Priceline after these earnings. So theoretically, if you did somewhere in this mid 500 range, you should be good. I did not, and so I really have no skin in the game there. Apple, new highs today. That's great. Glad to hold Apple. We'll continue to hold Apple because there's nothing wrong with it. This huge flush out day that we saw a couple of weeks ago, where we gapped up to 515, traded up to 525, and then closed on the lows around 500. The volume was huge. Obviously, it was a huge shakeout day. But the next day, you can see we established support, and you could have bought on that day and had your stop below that stop, and now you can just be trailing intraday lows or however, whatever, and you'd be getting paid off. So Apple overall, nothing wrong. Nasdaq strong, so it should continue to perform. American Express, nice day today. Kind of bummed that I've sold some, but given that my cost basis is well below 50, I will have no problem adding on to this and reestablishing a bigger position. That's just how it goes sometimes. And American Express goes to MasterCard, and obviously you can see new highs on MasterCard. Visa, I don't have a position in this, but it's good. MasterCard, if you remember, we bought back on these lows, and it was a killer buying opportunity. Held into earnings, got paid off greatly, and seeing the ride higher, very small position in this, not even a fourth of a position, but probably just gonna take profits eventually just to get it off my screen. Alpha Natural Resources. Now this one got hammered today, down 3.5%. But what we're looking at is it had to make a new intraday low relative to the bar made on Friday, and we didn't get that. We were just inside day, so it's really a do-nothing day. What you're really looking for is a move above the highs, 2049, or a move below the lows of 1879. That's a pretty big range for $20 stock in one day. But as far as today goes, there's nothing wrong with the price action other than it beat up a little bit. So just be aware of that. Look, Peabody Energy, same thing, got beat up. Now this made a new intraday low. A little bit frustrating because we are sorry, let me zoom back in the middle of the trading range. The high of the trading range is around 39. The low, for the beginning of the year at least, is 34, and I was buying at 36, so really halfway in the middle. Basically, in these type of situations, when it doesn't continue when you think it may, you go ahead and, you have the choice to realize that your stop is below, it's another almost 5% lower, or you scale down some and wait for the opportunity to present itself. This is why you buy in scales and you wait for the stock to start performing, start doing what you think it's going to do, to basically save your money, because you're not always going to be right, and the idea is to keep your losses small and let your winners do what they're going to do, and they're not always going to be home runs. In fact, they rarely ever are until you can identify a broad market move like we have with the general market since the October lows. But generally speaking, you're going to have a lot of base hits, a lot of doubles that are going to add up over time, and they're going to be really nice. And then, of course, you're going to have your home runs, which just top it off. Tech Resources, keep an eye on this. We're getting a little bit of weakness, but it closed relatively strong today. I'd still be looking at these lows made last week or 2 weeks ago. On the 16th, that's your major low. You want to see $38 hold because that's your point of control for the last 52 weeks. We'll just look at Freeport really quick. I do still believe that Freeport can fall a little more. That's what I'm really looking for it to do. $40 would really be where I want to get involved, but just keep watching it. I don't think this is a right here, right now opportunity. You have a lot of red. You've had 3 up days and about 7 or 8 down days in the last 10 trading days or so. That's worth noting. All right, financials. We'll just look at them really quick. Let me get rid of these drawings. Strong today, and I don't know if it was because, to be honest, I wasn't around all day today, just in the early morning, but I wasn't sure if it was because Warren Buffett's statement, saying he loves J.P. Morgan and Wells Fargo, owns JP for his personal account. I'm not sure if that was what sparked both Wells Fargo and up almost 3%, or JP Morgan up 2% to new highs, both of them. Well, not Wells Fargo, but what you're seeing here is basically a stock that's based, moves higher, and then on weakness is being bought. So I'm not sure if this is basically something you should sell into strength, but if think about it, if Warren Buffett's positive on it, and he's one of the greatest investors ever, it's not a bad thing to be buying the names he owns on weakness. That's not a bad strategy, and it's probably one of the more profitable strategies out there for people who are looking for, buy and hold strategies. Johnson Controls, just keep an eye on it. I said look to be a buyer on this pullback. We got a positive close today. However, I'd want to see this work out a little more. You can buy a little bit, but your stop, I would look to have a stop down sub 31. Really sub, you're looking at this 32 point of control for the year. That's where I'd really want to keep my stop, but one thing you can do is buy a small enough position where if you do have a stop down towards 30, or basically below 31, below these swing lows, you can even call this trend line if you want. You're not affected by if it moves down to this, hit your stop, and you get kicked out. If you lose, a relatively small amount, then it's not a big deal. So realize that you can always buy smaller just to get involved. NVIDIA, I just want to point out that it is coming back down. We've had basically two successful trades. One on the breakout, and then it reported earnings, and that was actually monster day. I actually owned some. I want to say it was 16 by 17 call spread, and I held it into earnings, and earnings came out. I was like, man, should have taken profits, especially when it got up towards 17. My spread was almost realized, the whole profit of it, and then got bailed out on earnings on that day. Ended up taking profits at the close on that day, which I think I know it was for a double on the spread, but the spread was worth, I could have quadrupled it. So, not that great, but, a double nevertheless. And what we're looking at now is a move back down towards the bottom end of this range. I'd look at $15, which is, you can see this horizontal line. That's kind of your line in the sand. And if it starts to drop below there, you look for support down at this, you see the 200-day moving average, red line, green line, 50-day, point of control. This should be setting up for a nice potential move higher, but give it an opportunity and wait for the price action to tell you. However, just like Johnson Controls, if you just want to start nibbling, there's nothing wrong with that. Win down over 1% today. I believe that this is something that you should really consider being involved in, and maybe it doesn't. Well, let me give you an example. Let's see. Chesapeake Energy, not a good example. Actually, Chesapeake the example's fine because they kind of look the same. What you have is a downtrend, and Chesapeake basically, I don't know, you could call this a bullish wedge pattern, you can call it whatever you want, but the point is that 2-year point of control was right at these levels. What we were looking for was a bounce. You could also take the, confirmation. You have point of control for the last 3 months. Let me zoom out so you can see. All down sub 23, and what happens when we get above 23? We get a nice pop to the upside. What happens on weakness? Earnings come out. You want to be a buyer on the weakness, and bam, you got a nice move higher. This is why you stay involved. And our target range was November's point of control. Where did it go to, and where has it been rejected since? November's point of control. So, it's funny how much this works. Think about it. When it's volume, that's where people have a lot of money at stake, and they're going to be willing to buy or sell their shares at those same levels because that's either means they're breaking even, or they're trying to double down, or whatever the case may be. So just realize that phenomena, and the realization that this is as legit as it gets. It's not just the 50-day moving average. It's where people have their money involved. So it's a little different when you look at it like that. But as far as when, I don't know if I got my point across. I kind of got sidetracked. It's trying to base, and we're having a downtrend. But what have we been doing for the last? I'm going to try to get the exact time. 3 months. We've been trading in a range, and you could even look back to September and say, hammering out a base at these levels. All we need is a little more volume, a little more skin in the game at these levels, and you'll see a pop to the upside, and or potentially downside. There's that too. But generally speaking, stocks move higher, especially if the market is, so just something to be aware of. Intel, I don't have much to say other than it's holding this range. We were talking about keeping a stop below these lows, and as long as you do that, you should be okay. Even if it comes down and hits your stop down around 26, keep an eye on it. You can always get back in, no problem. CSX, just something to point out. Value area low for the year, this blue line. That means this contains 70% of the volume over the last 52 weeks. What I'm seeing now is some support. If you want to place your stop right under 21, which were the recent swing lows, you can start getting involved and looking for a push back up towards 23, 24. I'm going to say that I'm not looking to do it yet, but I would not be surprised. Kind of reminds me of EMC, which based and has taken off to the upside. So CSX, which reported earnings last month, so you have nothing to worry about there. Just reported, or it looks like they gave out the dividend today, so people were rewarded. But I don't think there's anything wrong with CSX, especially for a longer term point of view. 52 weeks lows 17 and change, 52 week highs 27. You see, once we push up above these swing highs, there's really no volume until we get up towards 25. So you could potentially make $4 or $5 in this trade. Ford, bringing this back because I think it matters. We were all over Ford down at this. I remember being involved around $10. I want to say $10. But it's important to realize that stocks go up. Let me get the right tool. Actually, no, it's fine. Stocks go up, and stocks trade sideways. But when they trade sideways in uptrends, you want to buy the bottom of that range. And what we're seeing here, we had on earnings a sell-off. The low was $11.79. Today the low was $11.99. Is that close enough? I think so. I think it's something that you can start getting involved in and look for more upside. I would still just longer term target have, look at 14 minimum, but really $15 on the upside. And you can see if it really gets down to 11 or so, I think you should be snatching it up. American Electric Power. What I want to note here is this is a dividend payer, 5% or so, I want to say. And what we're seeing here is, 5% on the dime. But what we're seeing here is, okay, this is a giving you pearls kind of lesson here. You have a stock that continues to drift higher, and you want to be buyer on the weakness. Think about the last time this stock got absolutely hammered was back at not on the lows, the October 4 lows were the lows for the market, but here on American Electric back in August, you could see huge downdraft. Was it a great buying opportunity? Yes. And you could even connect it to the previous lows made in March. That's fine. But it ended up being a great buying opportunity, and off to the races. Probably a 6 or 7% dividend payer down there. Now it made new highs at the very beginning of the year, actually. So people sold into this strength, and now you're back at the highest volume price on huge selling volume. So this is either telling you that this thing's trying to top out, which it could be. I mean, you never know. Or it could be basically a great buying opportunity. Everyone's washed out. Everyone's sold on these 2 huge volume days. You can even say 3 and 4 here. But we're at a defined risk moment. You can place your stop under today's intraday low of 37.51, so you can do it as low as 37.49. And trading at 38.23 right now, I would expect a trade back up to the low 40s eventually. And if you get paid 5% over a year to do it, that's not that bad. And you can just kind of set it and forget it and see if, See if it does do that. But you're risking little to make a decent amount, and that's just something to be aware of. EMC, already covered this. This is a rocket. I took profits back. I'll show you where. On 215, and in my opinion, I thought the trade was done because up against point of control to the penny, it touched. You can see the high was 27.14. 27.15 is the point of control for the year. What are we doing? We had 2 days of selling after making new highs and a continuation. New highs today relative to this most recent rally. 28.73 is your 52-week high. I see nothing wrong with this. Last one, Under Armour. Remember, we were buying it at 75. Where is it now? 87. Where do you want to look to sell? $100. There's nothing wrong with this. I hope you caught on, because this is a winner. And if you just, you let names like these just work for you. It's been trading basically in a box, and the extremes have been selling opportunities and buying opportunities. But these boxes end up resolving themselves, kind of like Las Vegas Sands. Trades in a box. It's going to resolve one way or the other. We're getting an upside breakout. Don't you want to buy the top of this range, or try to, on any type of pullback on Las Vegas Sands? And on Under Armour, yes, we're at 52-week highs, but do you think this is the high? Do you think today was the high? So even if you aren't exposed in Under Armour, you can buy one share and try to scale in over a course of a month, a week, whatever you want to do, but just make sure you have your defined risk. If I'd be looking at Under Armour right here on this recent move, I see this low that was made. We had 2 down days, an up day, a down day. We had some sideways consolidation here, along with the volume back from the prior weeks. And sure enough, I move it over. Point of control for February. Place your stop right below. You're off to the races. So this is where your stop should be. So if you buy one share, well, it's close at 87.16, or that's where it's trading at now. But what you're looking at is about $5 of risk. So if take $5, multiply it by however many dollars you're willing to risk. So if you're willing to risk $50, buy 10 shares and realize that you could be stopped out and lose $50, or if your target's 100, so you're looking to make $13 off of $5 risk. That's really not a bad risk-reward ratio, and I'm sure that you're going to be rewarded for buying it. Now, it may trade up a couple more days and then trade back down and up. Think of it like Intel, which, remember, it traded in a range, and this was after Buffett said that he was long the stock, and people were selling into this weakness, and we were all over this. We bought this bottom of the range, saw it at the top of the range, took some profits, and then took the rest of the profits on the last move higher. But this is just textbook. This is trading, and if you are patient like this, you'll find yourself with very high win ratio on your trades, and really profiting and exploiting the majority. You're not going to catch the entire move, but the majority of a move. So anyways, take care. Remember to sign up for the Q&A on Wednesday, 8 p.m. Eastern Time, and I will talk to you tomorrow.